The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the Octa, November 14th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be a pioneer of our future versus a prisoner of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in right now, 877-927-6648. If you can't dial in, let your fingers do the walking. The way you do that, just send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And of course, well, inside our Tiger's Den, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, Dow trading down 66 points, 23,373 is what she's printing. S&P is off 10. NASDAQ 100 down 44.7%. Same with the semiconductor indice down about 0.8% or $9. You've got gold up $3. Silver is flat. Light sweet crude back $1.09. Leading the charge here, dollar-wise, the upside it is Buffalo Wild Wings. Private equity offer, it's up $30, 146. What she's printed. AutoZone up 15. Advanced Auto Parts up 14. Coolakey and Safa Industries, 18% or $4 the upside. American Woodmark Corp up $4. You've got Marco Polo down 9% or $10. Charter Communications off 8. Regeneron Pharmaceuticals down 7. Sage Therapeutics off $7. Of course, I want to look at what you want to look at. And right now that means, hey, Steve-O, since you just sat down in the chair, what should we go look at? Let's just do the same routine that we did yesterday, same kind of situation. Just getting in front of my computer screen. So we're going to do a little bit of a health check of the market, see what the message is. We'll take a look at the advanced decline oscillator readings for the New York Stock Exchange NASDAQ Composite in Dow. Yesterday when we did this, they are below zero. And yesterday our message, or this message, was, hey, sellers are in control. Doing very little damage, but still sellers are in control. No surprise to you that the market is traded lower. We'll go try to figure out what exactly that means on a short-term or longer-term basis out here. But right now we have the same kind of message. Now, the one tool that I'm looking at here inside of the New York Stock Exchange is to try to understand at the end of the day that's just going to be a critical pause. You'll have to stay tuned and see what is it that Stevie's looking for at the end of the day. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 63. S&P is down 10. So before we have that critical pause in the opening segment, we were discussing, hey, what is it you're looking for at the end of the day? And one of the things I'll be looking for or looking at is going to be the advanced decline oscillator reading inside the New York Stock Exchange. Now, if you're watching us on TigerTV, you can clearly see how we are making lower lows. Now, the lower lows that I'm referring to as a benchmark, believe it or not, is just from the trading session of October 25th. That's the lowest reading we've seen in that advanced decline oscillator. That closing reading was minus 138.61. My question is, do we get a closing reading below minus 138.61 today? If we do, then this is confirming an additional move lower inside the New York Stock Exchange. Now, you can't trade this little bugger, but it does give you a decent guide as to what to anticipate in the overall markets. We really use the New York Stock Exchange as a set of tools to assist us with other indications that we're looking at, because you just can't trade it, right? So it has... One could say it's little or not very useful. Well, there are some very useful elements of taking a look at the advanced decline line, the advanced decline summation line, really what I should say, the volume summation line, the advanced decline oscillator readings. It's got some very nice nuances. Now, the mere fact that even if it does close below 138.61, the other thing is, does it close at below minus 150 or at minus 150? Because that is when the New York Stock Exchange gets to an oversold reading. Now, that is hard to believe, considering that the high took place on October 23rd, intra-session high, 12,443, and we are at 12,272. That's nary a retracement. But that, folks, is what's really going on in the markets right now. This isn't a slow roll. This is no kind of, this is just your basic vanilla retracement, lack of one for the most part, but your retracement. So we'll watch this. Now, what happens if it doesn't close below minus 138? What was that number again? Minus 138.61, and we have a higher close, but we have a lower price out here. right? So intraday, what occurs out here is you get a little divergence pattern, and those divergences mean something. For example, last one that showed up was when, now here you got to very oversold or extreme oversold back on the trading session of August the 10th. You did, when it got down to minus 245, you did see a 4-day bounce inside the market, and then we had another flush lower. But what really formed on that next flush lower was you had a diverging pattern. Well, I got the green arrow out here on the very bottom for the advanced decline oscillator. When you see those divergences, they're very helpful in helping us to identify bottoms. Now, in the case of the New York Stock Exchange out here, it was this candle session right here, this day, August the 22nd. Most people wouldn't pick it up. That was the Four River Morningstar. The Morningstar pattern, evening star is bearish, morning star is bullish out here, but most people are only familiar with the 3-candle session, named after one of the great generals in Japan, Oda Nobunaga. We used to have an Oda Nobunaga inside the Tiger's Den. Well, that's where the name came from. I'm certain of it. But here, this pattern can form over 4, 5, 6 trading sessions. How powerful is that pattern? Mucho grande. You go back and take a look at the Dow chart on a daily basis in 2009 when it made its bottom, and you tell me what pattern formed out there. And then start following the Dow all the way up, and when it made some of those retracements, and tell me how many times when it made that pattern, that's the 4 or 5 or 6 River Morningstar, did it cement a significant bottom? You don't even have to go check. You will. Some of you will go check, and you'll find that the answer is all the time. So we pay attention to that. Is there just a mere fact that there is a divergence? Is that a signal that the market's getting ready to form a bottom out here? No. You have to have the cavalry show up, give you some type of bullish reversal signal out here. So that is one of the things, that's probably one of the primary things that I will be watching for at the end of the day. So thanks for asking about that. What else will Steve-O be looking for at the end of the day? Well, look, if there's going to be a change in trend, you already know that what we're going to see out here is we would see some type of market breadth bearish crossover. Now, we're going to go ahead and get rid of the blue line out there. Hocus pocus dominocus. We're only taking a look at the green and the red line. The green line tells us what percentage of stocks inside the S&P 500 are trading above the top of their TAS market profile. 166 is the answer at 1:23 in the afternoon, and 145 below. So 29% below, 33% above. If the market were going to make potentially some type of shorter to intermediate term change in trend, we would see a crossover. Do we have that? The answer is no, we do not. How about if we take a look at the NDX 100, which just seems to be getting hit fairly hard out here. Let's go take a look at it because we want to pay attention to this. This can be and often is a leading type of an indicator out here. Well, if it's a leading indicator, hold your bupkis. I'm not sure what that means, but it does show right now we do have a bearish crossover inside the NDX 100. Now hold your horses out here. We did have a bearish crossover for one trading session back on October the 25th out here. But we really do want to pay attention to this. And this is going to go ahead and move us over into the NQs to get a feel, because you really want to have the two things put together. You might say, what two things are you talking about? Well, one thing is taking a look at market breadth inside the NDX 100. Now, you've got 27% of the issues, that's 30 issues in this case, trading above zero, because there's more than 100 issues being traded inside the NDX 100. Gotcha out there. And you've got 31, so you've got 30 above, 31 below, right? It's hardly what you would call a conviction cross. But nonetheless, at 1:24 in the afternoon, you have we'll call it a non-conviction cross out here. So what is it that we need to take a look at in putting it together? Well, the putting it together says you got to go look at those market profiles. And the NQ, courtesy of the NQ out here, we can see that there was a brand new box formed today. Just for you. You talk about gifts just for you. Now, the beauty of that is that the NQs can continue to pull back and get down to a low of 62.24. You're trading at 63.12 right now. You do the math on that figure. So that type of pullback quite frankly, will just be normal. So you really, if there's going to be some type of intermediate term change in trend, you've got to see this thing bust out the bottom of today's profile that formed. Likewise, if there's going to be a bust out to the upside, we don't even care about the swing point from a couple trading sessions ago. Well, we sort of care, but we don't care because any close above 63.35 would be saying we are moving to the upside. So we do not have any type of confirmed signal that this market wants to move lower. You would at 62.25. Likewise, you close above 63.35. It says we're moving to the next level. And where's that level? Well, we'd have to go take a look at some other tools to figure that out. So there, voila, you've got it. You know what Stevie's looking at the end of the day's trading session, that advanced decline oscillator reading inside the New York Stock Exchange. We're going to take a look at our daily TAS market breadth, and we're going to look at those profiles in the ES, which we didn't talk about, and the NQ. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 60, S&P is down 9. So inside our Tiger's Den, one of our expert traders out there was pointing out that even though we've had just really a slight decline, which we have, I believe this is what he was pointing out, was that we're already in wave number 5. Today was a lower low than 2-3 trading sessions ago, getting to that fifth leg. You know that we like to pay attention to that Stevie Wonder singing in the key of G, so that would have 2 more potential legs to the downside out here. In what looks to be forming, so just really trying to put this together with what we looked at as far as our market profiles, as far as taking a look at the minus 150 area. You can see here, this is just the top 100 stocks inside U.S. stocks inside the New York Stock Exchange. You can see that this is really setting up some type of Gartley pattern. Well, actually, first, let me do this here first. First, one of the things that you can see out here is that this indice formed a beautiful top, right? You and I love to look for, because it's so consistent with the way that markets make tops and bottoms, and most certainly at significant tops and bottoms. In fact, I heard Schiller on as I was coming back from my appointment, and I hopped, I don't know, an hour ago, whenever it was, and you know, in a core basket case. Now, I'm just kidding there, but well, maybe not, because you know, getting stuck on this whole valuation thing, and he was talking about the volatility index, and where I say basket case, because he brought up 1929 out there, you know, and was talking about volatility. Of course, you know, how was he measuring that volatility? That doesn't even matter. The key is that there was a pattern that was present long before the crash in 1929. It was present at the top in 1929. It looked just like this, like in all of them. Now, we pay attention. You never know which ones are going to turn into actual corrections or bear markets. There are some ways to identify those, but the key is identifying this pattern, knowing it's present, and then taking a look at the pattern that begins to form out here. In the case of the New York Stock Exchange, top 100 U.S. companies, it appears to me, based on what we've taken a look at thus far, is that this is just forming a Gartley buy pattern. That Gartley buy pattern is not present just yet, but it would look something along the lines of, well, why is that just not working now? Oh, there we go. Well, son of a gun. Well, I know I can do this here. Let me move it over. I think we can do this and pull it down. There we go. So our 1-to-1 A to B equals CD. This is 1.272. I'm going to just try to time it right around here. It looks to me like this is forming some type. We're not there yet. We don't see any type of bullish reversal signal. If we did, the bottom could be today, as a matter of fact. But looks to me like where this is headed to is around the 97.41 level, which would be could be a really nice Gartley buy pattern. If it's the beginning of a top, then you won't see price ever get back above Stevie's red line out here on a daily basis. Right now it's priced at 99.63. It's too early to put that number on a piece of paper out here. But this is what it looks like. Very strong move that we've seen from August out here in this indice. Again, that's something that you can trade, but you can use this as a tool out here, and could be mucho grande, A to B equals CD to the upside. Okay, we have a request that came in from James. James says, if I can get this back on my phone, let me make sure that I properly quote James. Hi, Steve. Hi, James. I am long Apple with 100 shares. Would like to buy more on a dip. How low do you see Apple going? Thanks. Sent from my iPhone. Well, let's go take a look at Apple. Let's look at Apple. Let's do this by looking at our 3 separate time frame charts, as well as Stevie's other soothsayer chart out here. And so we can see that Apple had completed an A to B equals CD to the upside. That's showing on our daily chart. Gave us the initial price projection of 171.69. The 101.272 was a bit higher, 177.82. When we take a look at the Apple chart out here, we're going to notice that here's one of those price relative strength divergent patterns out here September 1st. But what we're going to notice is that a couple trading sessions ago, this formed a nice little Tom DeMark sequential signal. That's the number 13, blue 13 on my chart. 2 trading sessions earlier was a Tom DeMark combo count. So you got 2 of these when you get to the number 13, it's not like it is a superstitious unlucky number. It's actually lucky in that you get to see it, and you know that that is sometimes where a market just simply gets extended and does something else. Now, the something else gets confirmed when you see a close below the close for sessions prior. Well, that was yesterday, as a matter of fact, James. So today we see price closing below Stevie's red line. Says we want to go lower. Now, we always have to. We don't have to, but I would suggest that you do this. Whenever there is some type of top or bottom that's made, you got to identify the opposite, right? Where is the next, in this case here at top? Where is the level of support? So we've got a couple different places that you and I can look with regard to level of support out here. We're going to put the daily chart up on our screen. One of those levels happens to be matching exactly what it's doing right now, which, James, is that it's traded down into the bottom of its daily box. This should be good support. Will it be? I don't know, but it should be good support. 171.47 is what we're trading at. The bottom of the box is 171.86. You got to love that. 171.86. We're trading at 171.96. So 97. You can see the red number on my chart move. So it may be at support. Well, let's go take a look at the last gap out here. Last gap was on November 3rd. Well, November 3rd, the volume there was 59 million. You've done 14 million today. You're pulling down into support on light volume. Now, typically, James, I like to see levels of support or resistance get tested 3 times. We really haven't been tested just yet. So, is this the place that you add more shares? I don't know. You know what? Let's go back to Stevie's other chart out here, and let's just change it from a daily to the weekly, right? Whenever you're placing a trade, understand what's happening on a time frame above you and below you. You and I, we know that that's what we should do. So, hey, if that's what we should do, let's go do it. What do we see on a weekly time frame chart? Uh-oh. On a weekly chart, we can see that price has been moving higher, doing it with less relative energy. Happens to be a TD combo count from a couple weeks ago as well. But if you're asking me which is the better pattern, it's the Stevie pattern, because this one's present before every major market top. It's present at most minor market tops out here, and it's why we pay attention to it. Now, it's a weekly chart. It's only Tuesday. So, James, I don't know how this is going to end the week. But right now, you have a bearish reversal signal. Right now, you've got the bear sash going. This says, at a minimum, price ought to get down to Stevie's red line, 168.37. So here's the deal, Shamil. Watch Apple. Light volume pullbacks are nice out here. You and I, we don't know which pattern it is that's going to play out. The good news is you have some shares. You're just trying to add to those. I'm hoping that you've got a nice profit out here. So you're asking yourself the right question. I would say just be patient. See what happens if it can get down and test 171.12. Maybe even the top of November 2nd, because that's the breakout. And that's 157.94. Let's just see how Apple closes the week. You're already long Apple. You can afford to be patient. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off about 53. Let's go out to Tampa and speak with Sophia. Sophia, thanks for calling. Thanks for holding. How are you today?
I am doing well, Steve. Thank you so much for taking my call. Steve,
My pleasure.
I have a two-part question, and then I'm going to hang up so I can listen to you online, okay?
Absolutely.
It has to do with Amazon. I'm currently short that today, intraday. I want to know what close would make you hold at least half of the position overnight, and what close below what number would let you do that, or would you just exit out in general at the end of the day if you were in the green?
Those are the two questions.
And then my second one, please, on the VIX. If it closes near the highs of today, where do you estimate it would go to? Okay, so those are my two. I'm going to hang up now.
Okay,
Thank
you got it. You bet. Thanks for listening. Thanks for calling. So, Sophia, the first question. Let's go to Sophia's first question, which is that she's taken an intraday short on Amazon. Now, Maria, what we are looking at the moment is our 3-panel slides that show the daily, the weekly, and the monthly charts out here. You and I are going to really focus on the daily chart at the moment because it's really a shorter term question that you're asking. And what you're going to see out here is we're going to use as our benchmark price levels. We're going to go ahead and use these market profiles. Now, there was a brand new market profile that formed yesterday. The very first thing that I'm going to do for you is I'm going to turn price off because the profile itself can have meaning. In this case, it does, very much so. And this is going to answer the question for you. If you'll notice here, the center line of the box is much closer to the top of that box. So that is what we refer to as a bearish structured box. Now, what that means is that sellers that are camped at the 1130.67 level should have enough energy to push price down to the bottom of the box. In other words, price should be able to trade within that entire session. Now, this just formed 2 days ago. Because it has a bearish structure to it, if you were to see a close above 1130.67, that would suggest to you that a bearish structured box failed to hold resistance. Now, what do you do if it closes at 1130.68 or 69 or 70? I don't know. I mean, closing above it is not a good thing for you. I'm not sure what the pattern was or what got you into the short position out there, so I would need you on the phone to really try to talk through that piece of it. We don't have that at the moment. Bottom line, closing above 1130.67 would not be a good thing. Likewise, closing below 1130.67 gives you that opportunity for price discovery to get down to the 1106.34. It's probably at that stage, because it sounded like a trade, and I would go ahead and have my orders in advance, where I would go ahead and get out of the position and then assess at that stage, because if price were to close below 1106.34, well, then a significant level of support will have failed. Now let's put the price bars on the chart out here, and just to go ahead and kind of you see, yesterday's close was a rejection of that high, just barely. And today, right now, we're trading over it. Now, with regard to, should you take a short trade out here? If we take a look on a weekly perspective for Amazon, the swing point that I'm going to pay attention to is out here. I want to see what happened the week that began July 24th with 27 million shares. Well, and it's not a bearish candle or anything, although I take that back. It is a key reversal session. Let me see. The low of the prior week was 1,381. Well, yeah, it is. So even though it's not your typical Japanese candlestick, it is a bearish reversal signal because price is extended. So we're still going to call the top of that resistance. So that had volume, and we're trading above it. So that also becomes a level of support. I don't remember the profile level I gave you, but on the weekly basis, it's 108.3.31 would be a level. Now, 27 million shares was taken out with a wide-ranging bar, that's for sure, which had more volume. 31 million shares. You see, on a weekly basis, in the case of Amazon, what it's trying to do at a minimum, I'm just giving you the small A to B equals CD to the upside, it's on its way up to 1304, 1406. Yeah, Jeff Bezos, he's going to continue to be the richest man in the world. At least that's the message of the weekly chart inside of Amazon. If I put this chart out here for you, Sophia, here's the weekly chart that shows Stevie's set of tools where it can identify or does identify tops and bottoms. We just see a market being stretched right now. Just being stretched doesn't mean anything. You have to have the cavalry arrive. Do we have a TD sequential 13 count last week? Yes. Has it confirmed? No. In fact, really to confirm here, it's not going to happen. You have to close below the session here from 4 weeks ago, and that is not likely to occur out here. So stretched a bit, sure, but you've got an A to B equals CD to the upside. So I just say, just be careful. But those are your parameters. At least those are the parameters that I would be looking at inside of Amazon. The other question you had was about the spot volatility index. And to Ann, the question there was, hey, where is that perhaps headed to? Now, if we take a look at the spot volatility index, and the question was if it closes, I think it was if it closes higher today, where might it head to? In this case here, what I would be looking at, and I don't know what you're trading as a vehicle for this, because we take a look at the spot volatility index, that's not necessarily what the UVXY or SVXU or all those different ones are based upon. Those are based on futures contracts. But to answer your question specifically, my eyes would go to the previous swing point, no matter whether it's a spot volatility index or it's a stock or it's a futures contract or a ETF, whatever it might be. That says I would be looking at 25.67.40 out here. Let me take a look, see what else I might have on a different screen just to try to answer. So that would be one of the things that would be my target area. But if the spot volatility index continues to climb out here, let me just see this. And I would be looking to see what kind of candle formed. One of our dentists pointed this out a while ago, and that was talking about shooting star candles, which is the current pattern that is out there. We found that shooting stars and spot volatility index did not necessarily mean that the spot VIX index was going to trade lower. But we did see where it happened a number of times. Typically the way that unlike a hammer candle, the way that a shooting star, and I don't know if it's going to be a shooting star at the day's end, but the way that it works, it either works or it doesn't. Meaning at that very next session, price ought to start moving lower, kind of like it did the very last time out here. So if you get a shooting star candle, it would say be careful if you're trading one of those volatility type of ETNs out there, it might not be a bad idea to go ahead and take your profits. Why? Because the message is, with regard to a shooting star, is that you're up at resistance. So resistance inside out here, you've got 3 shooting stars that basically are, resistance zones or areas. October 20th was one, October 25th, and maybe today. Maybe today, I don't know. So that's the way I would be taking a look at the spot volatility index. But more likely than not, I'm going to guess that your question was more based around one of the ETFs. And those ETFs, if you go take a look at them, they're based upon the next 2 futures contracts. In this case, that'd be December and January. They may have totally different messages. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last 2 questions that we're going to try to answer for our listeners, viewers out there. Danny and Atlanta want to take a look at the yen and gold. There's an amazing correlation between the two out here. And here's what I'm looking at, Dan. This is a little bit different chart than what we typically would look at out here. But I want you to pay attention to the center panel and the right-hand panel. That's going to be yen futures and the gold contract. The key level here for yen futures to close above is going to be 0.86289. I guess I really do need to get my glasses, maybe my glasses. But at the top of that box out there, which is a bearish structured box, 0.88 269. I think that's it, or 289. It's got to close above the top of the box, then to have a positive influence on gold. But the reality is, gold has to close above the top of its box as well. I can see that. That's 1287.10. Until then, you just have sideways consolidation inside of the gold contract out here. And I know you're not, I don't think you're trading the yen futures, but a close above that in yen futures, then you've got a bullish message out here versus bearish. So that's what I'm seeing. We had Dano who wanted to take a look at the IBB. My thoughts on a target. Do you see this going lower for better opportunity? Something along those lines. The answer is unequivocally yes. Now, the reason that I say that, I looked at that quickly during the breakout here. Where is it? There we go. Here's the IBB in 3 different time frames out here. Take a look at this wide-ranging bar today. Now, it's just not a wide-ranging bar. You're passing through a swing point or a set of swing points from August 18th and the 19th, 937 or 569,000 shares. You can see you've done 1.1 million shares already. So our eyes automatically are going to shift back to the next swing point on a daily basis. Dano, that's going to be the May 31st level, somewhere between 286 and 282. We can see trend line Ys out here. It looks to me like the trend has been broken. It's been broken with conviction out here. Yeah, I see lower price inside the IBB. Keep those hands in those pockets. Where are they headed to? Shoot, you're below profiles on a weekly basis. All we have is now the monthly chart. And that says 295.65, 277.20, 258.75 out here might be levels to pay attention to. Take care. Have a great day. Stay tuned for David White. We'll see you tomorrow on Wonderful Wednesday.
Larry Pezzavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrency.